JJ, the CPA here. Hope you're doing well. Self-employed taxes are terrible. Now, self-employed taxes, what is that? It's Social Security and Medicare taxes. That is a tax tacked on and added to your individual taxes. So I want to focus in on those that are incurring the self-employment tax because they are filing a Schedule C. When you file a Schedule C, you're not filing a return separate from your business. And from my perspective, when you are paying self-employment taxes, you're basically punching yourself. If I had a hammer, I'd be hitting myself in the head by paying self-employment taxes. Now, I do know paying into Social Security and Medicare is a good thing. It helps us in retirement. I do think that it will be there in some way, shape, or form. So you do want to pay in, but the problem is when you're filing a Schedule C for your business, you have no choice on the amount of income that tax will nail. Meaning, when you file a Schedule C, whatever your net income is, it will be subject to self-employment taxes. And again, that's in addition to regular income taxes. So when you hear the tax rates, right, all the way up to 30%, that's not even what self-employment tax is. It's this separate calculation that whatever your net is up to $137,700, I believe for this year, but up to that net amount, okay, it's 15.3%. Oh my gosh. So if you net 100 grand, you've got 15,000 and change in self-employment taxes. And that's again, in addition to regular income taxes. So you might net 100 grand, you're going to get nailed with 15,000 in self-employment taxes. And let's just say that your tax rate, just for grins, is 15%. That would be a blended around for your income tax. That's 30% in taxes, not to mention the state, which for most it's around 5%, 35% in that simple example in taxes. That truly nauseates me. So what I've made a career on in terms of working with people like you that are self-employed, clients like you, meaning you have your own business, right? We throw around self-employed all the time, but if you have your own business, you consider yourself self-employed. But what you have to weigh here is, okay, well, do I want to just pay tax on whatever I net, or do I want to take a little bit of control of my own tax destiny and see if I can't save on the self-employment taxes? So how do you do that? Here it is in 30 seconds. You take your business, you formalize it with the Secretary of State, LLC, okay? You file a Form 2553, which is an S election with the IRS within 75 days of formalizing it. And you're an S-Corp that files a Form 1120S, which is separate from your business, and then you pay yourself wages. I don't know if that was 30 seconds or not. The key here, and where many will discourage self-employeds from setting up an S-Corp, is that part, the wages. So I kind of have a break even. I travel around the country and talking to other CPAs, been to over 50 cities in the last couple of years, talking with thousands of CPAs. And one of the things that I ask, just out of curiosity, is what's that threshold for you CPAs, as I'm asking, when someone should stop filing a Schedule C to avoid having to pay self-employment taxes on whatever they net and elect to be an S corporation filing a separate return? And for most, it's between $30,000 and $50,000, meaning if you're netting less than $30,000 on your Schedule C, well, it might not make sense to become an S-Corp. And here's why you want to be an S-Corp. You ready for this? The S-Corp The same income, the same expenses is going to yield the same net result. And in this example, $100,000. So when it's on a Schedule C, it's subject to 15.3% taxes. Well, when it's coming down to your individual return, you're reporting on your individual return, comes on what's called a K1. It's just a different line item on your individual return. That $100,000 by law, by statute, it's not an opinion. It's not a, are you sure? It is not subject to self-employment tax. Just save $15,000 and change right there by being an S-Corp. Now, there's a few more things to it, but even if you stop right here, what I want you to do is talk to your tax advisor. Talk to who's doing your taxes. If you're doing a Schedule C and you're line 31, which is a really popular thing to look at right now, right? Because it determines PPP loan and the PPP forgiveness, but it's your net income. So if you're much above, I'll just call it 20,000, and you think that your income and your net's going to go up over time, you really need to think about being an S-Corp. Let me tell you this, of all the businesses that I work with right now, okay, on my current client list, okay, of the 1,000 businesses roughly that I work with right now, 4, make sure you can see the 4, file a Schedule C, and it's because they're netting less than 10 grand, okay? That's how many clients I have that they're filing an S-Corp. So, yes, you have to pay yourself wages. And what are those wages going to be subject to, right? And this is where then people will talk you out of it because they'll say, well, it doesn't make any difference. Well, to an extent, it doesn't make any difference. But you take your wages, okay, and you have to withhold 7.65%, right? Just like any other employee. And then on your wages, the business has to match 7.65%. Now, what is 7.65%? Well, it's Social Security and Medicare, right? Social Security is 6.2%. And then the Medicare is 1.45%. So when you are employing yourself, you're paying yourself your own wages from your own business, you're going to incur the tax that's withheld from your wages, 7.65%. You're going to, as the employer, like any other employee that you would have, you have to then also pay, as the employer, 7.65% on those wages. You map those two together, line them up, add them together, and it's 15.3%. And you're like, well, hang on a second. Why would I do wages to myself? Why would I pay myself a W-2 if what you're telling me is on the wages, I'm going to have to pay 15.3% in taxes? I mean, it's the same as the Social Security rate. Because remember, Social Security tax rate is Social Security and Medicare. The reason it's 15.3% on the net Schedule C for the self-employed, okay, is that they don't have an employer, right? So it is 7.65 plus 7.65 to equal the 15.3 when you follow that through. So you're sitting there and you're like, well, it sounds like it's the same though, JJ. If I'm paying 15.3% over here and I'm paying 15.3% even if I set up an S-Corp, why do the S-Corp? Well, because you get to take control of the amount that is subject to that 15.3%. So you take a business and it's netting $100,000 after all expenses and after you paid everything out. So you're left with 100 grand to you. Schedule C, you pay tax on that net 100 grand at 15.3% just on the self-employment tax. Now, if I have an S-Corp, and let's just say for grins, I pay myself $50,000 in wages, okay? Then only $50,000 of my tax world is going to be subject to the 15.3%, which just saved $7,500 roughly. And that could be for the rest of the time you own this business. Over 10 years, $75,000 in savings in that simple example, assuming it all stayed the same. You have your own business for 20 years, so on and so forth, right? That's a lot of savings every year. Now, you might say, yeah, but that's less going into Social Security. That's less going into the Medicare. True. But what could you do with that $7,500 may be better than what the government can do. I'll just say as a side note, I've never had a client that has received much more than about $25,000 in retirement, regardless of how much they made throughout their working years. Most are getting $17,000, $18,000, been paying in their entire career into Social Security. So that $7,500 that you save, you could put it into a retirement account. If you have an S-Corp and you're paying yourself wages, you can put it into a simple account, which is just like a 401k, but it's just like it says, it's simple. Just put it in, you get the deduction. So from my perspective, it just makes sense that you would want to be an S-Corp because you get to control the amount of your income subject to the 15.3%. Now, I hear, well, that sounds all good, maybe too good to be true. It's not too good to be true. It just is, okay? But what are the downsides? Well, the downside is this, right? You're gonna need to run payroll. You're gonna have to withhold taxes from your own payroll and get them paid into the state for state unemployment tax, state withholdings. You've gotta pay in federal unemployment tax, as well as withholdings of Social Security and Medicare. And if there's any withholdings of federal taxes, you gotta file monthly and quarterly forms. Oh my gosh, and then annual forms, like, oh my gosh, that sounds like a lot. Well, find a third-party payroll company. It's worth the cost. Let's just say it costs you $50 a month. What, $50 a month? Now we're trying to put together a scenario that's saving you $7,500 a year in that scenario. So the reason I'm telling you the costs is to know why there's now, well, why is it that I would want to wait until I made $20,000 or more on my net to make it worth it? Well, because there's going to be costs associated in it. So you don't want to spend more to save taxes, but you spent more to save taxes that wouldn't make it worth it, right? So let's just say it's $50 a month, $600 a year. I know you could try and do it yourself, but my gosh, this is not one to try at home. Please don't. Just get a payroll company. I know QuickBooks can do payroll, but junk in, junk out, right? You're doing business. You don't need to learn payroll. It's $50. Do it. Now, you do have to have a separate bank account. Shouldn't be a cost anymore nowadays, other than maybe some checks. You will need to keep up with your books. Well, maybe you're doing it in Excel, maybe you're doing old-fashioned, maybe you're buying QuickBooks, but maybe there's a cost there. And then you need to file a separate tax return. Now, if you do a good job and you give your tax pro a clean set of financials, meaning here's my income and here's my expenses, here's how much cash I had at the end of the year, that's your basic financials. Shouldn't be that expensive to get a corporate return done, but let's just say for grins that you're spending $750 on a very simple S-Corp return because it's a separate tax return. So right there, we're looking at maybe $1,300, $1,400. There might be some costs to set up and formalize your entity, but we could find a lot of roadblocks, but you have to then look at, well, how much am I going to save? That's why I would say, if you're going to net less than $20,000, well, what's your self-employment tax? Your self-employment tax would be about $3,000. Well, if the costs here are going to cost you $1,500 or more, is it worth it? Does it make sense? Now, when you're going into the S-Corp, the question I usually get is, but JJ, how do I get my money out? If you're telling me I'm going to net $100,000 and I'm only going to pay myself $50,000 in wages, how do I get the other $50,000? Well, you have your separate business account. You just write yourself a check. It's not a payroll check. It's called a distribution, and voila, you're getting the money. Now, typically what I tell clients is, you run the payroll to yourself, every other week or 1st and 15th. And then when you're pulling out distributions, it's not payroll, so it shouldn't be coming out on the 1st and 15th. That's what payroll is. If you're pulling out distributions, in essence, it's supposed to be based on profitability. So once a month, you're pulling out a distribution. Twice a month, you're doing payroll. About 50-50, I think what's safe and just really very common is a 60-40, meaning if you're netting $100,000, that's $100,000 you could take out or pay yourself in some way, shape, or form. $60,000 as wages and $40,000 as net. But I'm telling you, when I go around the country, I hear it all different ways. So it just depends on who's advising you. That's why I went with the 50-50. I think 50-50 is fine. Kind of depends on what your business is and do you have other people involved. I think you wouldn't want to pay yourself wages of $20,000 and pull $80,000 in distribution. But really, here's what it comes down to. You ready? Look at your Schedule C, line 31, like we've been looking at over and over with PPP. Is it more than $20,000? The second question is it going to be more than $20,000 in 2020 or 2021? That's when I think personally, JJ the CPA, you should look at whether or not you should be an S-Corp. Now, if you're right at $20,000 here in year 2020, then I would gear up to 1/1/2021, formalize your business at the Secretary of State, file the Form 2553. Best to have your tax advisor do this, okay? I don't like you doing stuff on your own on this stuff, okay? You may look at it and it's simple, but if you forget a signature on the second page or at the bottom of the first one, and you're not an S-Corp, now you're paying corporate tax, and all I'm saying is, if you're gonna go this route, you need to pay a little bit. Have yourself a tax advisor that's familiar with S corporations. I don't have a copy of my book, but if I did, you can catch it on Amazon, or you can get it on Amazon.com. But the reason I just bring it up is that in the beginning of that book, I talk about how to find a good tax advisor for you, because there's great tax advisors, EAs and CPAs, but the reality is that we're not good at everything, right? Meaning we specialize. So at the beginning of the book, I give you some tips on how to determine quickly if the CPA tax advisor specializes in what you do and what you need. So know this, that you can control how much you're paying in self-employment taxes by having an S-Corp. The other part to take away from here is that if you are a Schedule C, maybe you didn't even know, but you are paying those additional self-employment taxes. It's part of your tax planning, part of your tax considerations. All right, hey, if you made it till here, I bet you're interested in being an S-Corp and running some scenarios. So I'll just let you know this. You can go to jjthecpa.com and you can actually schedule a call with me. There's various ways that we can interact with each other. Just a 30-minute phone call, or we could have a 45-minute Zoom call, or a 90-minute Zoom call. We can just do a one-time deal. I can walk you through any of this aspect and make sure that you're doing what it is that you need to do, especially at the beginning part of it, and then kind of push you in the right direction for working with your tax advisor or how to find one. So I'm not taking on tax work. I'm not going to be able to do your taxes, but I can be a consultant CPA for you, even if it's just one time. And then I'll just throw it out. I've got a 12-week course that I'm putting together to walk through what I do with my clients in a year's time. So what I do with clients in 12 months, I'm doing in 12 weeks. So again, jjthecpa.com, and you will find some more information about that. If not, hopefully you got enough information here that you can take to your tax advisor and start saving yourself self-employment taxes for the rest of you owning your own business. All right, hey, sound good? Hey, thanks for tuning in. I'd love it if you'd subscribe, and then don't you ever forget, you've never met a CPA quite like me. All right, hey, you have a great day.